stock market is continuing to fall, and judging by the last week's candle, even the last day on Friday, this market's looking really, really bearish. I think we see a lot more downside, but it's a good thing if you have money lying around and you're excited about buying assets that are cheaper. So I do have money lying around, so I'm kind of excited. It just stinks looking at the P&L and seeing like, wow, that's, I guess, a big percentage loss, but it's relatively, I mean, I'm still young. I feel like most of the people watching this video are still young. You want to see lower prices in any type of asset because that means you're getting them for cheaper and the potential reward is much greater. In this video, we'll take a look at some stocks. I'm looking at the overall market, kind of but identify some price levels that I think are quite significant that the market might reach to. I mean, again, a lot of this is somewhat speculative, but, you know, we're using some reasoning and logic behind it, so, yeah, I'm trying to think of any other things. Anyway, so let's go back to the weekly candles on the SPY. So this coincidental point for me, $400, along with this rising, like, upper channel of where the market probably should be, you know, cycling, whatever, what's that word? Going back and forth. This failed on Friday, and last week shot below that and below that, so it went through basically like 3 major supports all at the same time. That is pretty bearish. We did actually get this move up and then the move down. I thought it was going to actually go above to like 430, but it didn't. The fact that this fell here, I think we go to 350. Like that's the next big support. Will we get there in a week? I don't know about a week, but actually, what was the market down last week? About 5%, so yeah, maybe 375. We'll see some support activity. We do see some candles over here, the wick here. But I think 350 is probably where we go. I think a longer, bigger term, again, maybe a few months, maybe the remainder of the year, we work our way down to this grind line here. Maybe, so here's December. Maybe the market falls like 10% more over until December, just chops its way down. Maybe it goes up, you know, back and forth. But the way the market has been behaving, it's been very like a Sharpie, if that makes sense. So from here to here, 1 month, we're down 15%. So we can hit our goal, not our goal, but the target that I'm looking at easily in a month because we've already done it. We've done it over here too. Just it moves quite fast. Let's take a look at the Qs. The Qs, I think, could fall up farther. Again, we're already down like 25-something%. 280, I don't think that's really a support, but it could bounce a little bit there. But I think, so we actually are in this channel now. Because on big time frames, we are in the channel. We should be, actually, that's a great thing to look at. Hold on. Go to the SPX. Let's put on our standard, what happened to my... Oh yeah, my computer got reset, so we gotta do standard deviation channel. Let's do the 3. We want a 3 standard deviation. Sure. And all time. So we are, look at that, we're back below. I mean, we were up there for so long, but now we're... So again, just in case you're don't know what we're looking at, so this is so if you took the price action data of everything since 1928, every monthly candle, and you plotted it, and you put a statistical like distribution on it, and you wanted a 99.5% confidence interval of where the true value of the market should lie. The market should be between, from using today with everything we're looking at, between 40, or the SPY, or the SPX should be 4,329 to about $0. I mean, obviously, but you can't go negative in the market, but so you can be 99.5% confident that 0 to about 4,200 or 4,300 the price should be. And for a long time we were not there. And statistically, again, you can say, oh, it doesn't matter, but statistically that is insanely unlikely to ever happen. But yeah, there we are. Now the other thing is, 95% confidence interval about, wow, 3 standard deviation is 99.5. So that, again, that's such a 2 confidence interval is plenty, and we're still very, very far above that. So I can be 95% confident that the true value of the stock market, the price it should be today, should be in this range, and we're still out of it. Again, there's a 5% confidence. I can have a 5% confidence that the true value is outside. So there is some, like, ambiguity. Is that what I want to use? There's a possibility that it could be outside. But I'm just saying that if I have 95% chance, if you look at that on a pie chart, you're gonna be thinking, oh, I want the higher probability anyway. I think it's important to explain that because on big time frames and just for a bigger picture, where's the market heading? That's another huge reason why it probably should continue to fall. And again, statistically, does it matter? It depends if you want to believe the statistics or not, but numbers, they work. And I can go off of that. Speaking of that, Google, I'm just looking at Google. I'm eyeing it up. We're back at 22, below 2250. Ooh, my buy price was below 2250. I'm really hoping we get 2K. I think just as overall weakness, we will see it. Yeah, I like it at that price. I really would like to not buy $2,000 at a time per Google share. So this split is next in basically a month. Splitting 20 to 1, so it'll go to $100 about. That'll be nice to pick up shares of Google without having to drop whole paychecks on it, Yeah, let's see. Apple's actually fallen too. Yeah, I don't know. This still could go a long way. This is so expensive. Let's just go down the watch list. Actually, what's AMD doing? Oh, AMD actually had a pretty decent pop, but man, I have so many lines on here. Yeah, it's a good company, but it's, interesting here. We got that grind line, but now we're facing this little, it says 260, 270, about in that range. This is American Tower Corp, AMD. Got Bob again, this spike up, what does that move? That's a 30% move. Clorox, yeah, this is gonna keep going down. Maybe, yeah, again, maybe 115 below, I start getting somewhat interested. We already did some valuation on it from a fundamental or financial point of view, but just don't care until then. Corsair, man, we're at these $15, even 14. The only thing holding this together is this weak little IPO almost candle. From a valuation point of view, I think this company's not bad. It's just whatever the market wants to put on it. The supply chain problems a lot of these companies do. It's going to impact the company's profitability. And almost every company, the whole sector, or basically the whole market. JP Morgan, let's go to big time frames. At this trend line, I get interested. I think maybe 20 more percent. $100. I think $100 is right here. Oh, I could eye it up. That's what I'm kind of looking at. I mean, I just want some other assets in the portfolio. I don't feel diversification is definitely a discussion for a whole different video. Should you be diversified? I mean, yeah, but why would, looking at the Qs, why would I want to own any tech when it's in 3 standard deviation zone? Everything's above a 25, 30 PE. Why would I want to own that? So it doesn't make sense to diversify with those assets. Again, it's a discussion. It's not just a sort of like a rule. And if you're looking at Realty, again, we've been talking about this for months. I'd like it below 60, possibly 55, but people are really holding this thing up. This has got a community. PayPal below 80. When does PayPal become a buy? I don't know. If it does, actually, but Snap-on, I'm eyeing this up. Got a pretty good balance sheet. They're increasing their dividend very rapidly. They can do so because of the amount of free cash flow they're making and that percentage, the ratio. Man, they could double the dividend easily, and it would be about 50-60% of their free cash flow. Good. not that they don't have a good revenue increase, or the projected if the analysts are projecting the revenue not going to increase that much. But I do like the stability of the company, and it's a different kind of space. I guess they sell like mostly tools and that nature. They have some other stuff, but Simon Property is actually getting kind of interesting too. They're above a 6%. They may almost be a 7% yield. When I didn't do a fundamental analysis on this, but here's $100. It's almost at 100 now. 70 bucks. It's 80 to 75 possibly. Let's just put a line at like 70, 50, 75. Roughly here. Yeah, that actually aligns with a lot. I mean, that's still gonna fall like 25% if it does, but yeah, these REITs are looking a little nice. Stag is, I kind of would like to buy this one first. This one's probably gonna be the REIT that I will pick up. My friend already started picking it up, but $30 is when I start probably oh my gosh, if I could talk, probably be buying, preferably at this lower channel here, maybe like below 30.28, maybe the yield below 30 is about a 5.1 roughly. Again, these are taxed a little bit differently, so gotta be mindful of that. But just having a REIT would be nice. What's Tesla doing? I heard Tesla's having another split, 3-for-1 split here. I mean, sure, but yeah, it's still again super expensive. Take Two, back below. If it goes back to 100, I think I'm gonna start picking it up. I kind of missed the opportunity here on earnings, but yeah, the valuation-wise for potential growth, I think $100 looks pretty nice. Probably my more favorite company in the gaming sector. Been buying some more uranium too. It's a whole other conversation too. XLE is ripping up. Exxon is destroying my portfolio in the positive way. I guess improving a lot. I'm up like 100-something%. Not including the dividends, which we've had for well over a year. What is this? Almost 2 years now. Crazy. Been buying a lot of WPA still. Position size is quite large, not quite large, but it's like maybe top 3 or 4 in the portfolio. Intel, yeah, this thing got smoked, and it's probably gonna keep getting smoked. I'm happy buying it. It just thinks I could have just waited, been more patient, and bought lower. But again, you don't know. There's no way to know it was gonna continue to go down. I said I wasn't gonna be surprised if it did. It just thinks that it did, you know. It's like bittersweet. Oh, I get to buy at cheaper prices, but I already put in pretty sizable purchase. My average price is like 40, basically 49. It's just under 49, but I'm gonna try and lower it. I think if we go to 38, I will probably be buying a decent amount of shares, because that is, I identified as somewhat of a support, although we did already break the 2 big supports that I was identifying. I guess here, what is this? Maybe here, yeah, either way it's broken. Not yet, this level 38 is a support. I forgot we bought this activity here too. So I mean, yeah, that's probably my price if I buy 38. Maybe I can bring my average cost to like, let's say 47, definitely 47, but maybe 45 would be nice. But anyway, yeah, just buying it. I like the company. Again, they got problems. Will they fix it? Not sure. But it's a high confidence. It probably will. Foot Locker, I'm liking. I hope, if I want to see $25 on Foot Locker. It's already so cheap. I would be not happy, but I feel like this company's gonna get bought out soon. It's just so cheap. Yeah, there's also, I completely forgot about that. So yeah, like Kohl's is having that thing, they might get bought out. It happened back here, and back here again, they're talking about these deals, the big spikes, I remember that. But I mean, Foot Locker's just so cheap. And I get like the whole Nike thing, like, you know, they're not going to be buying as much from Nike, so that means they're not going to be selling as much from Nike, which is a big percentage of the revenue and profit, but they're also making good, like, plays. Like, they're buying other assets and becoming more diversified in like the sneaker and athletic wear space. You know, they don't want to be a middleman, so relying on Nike anyway. I mean, I guess they were forced to do this, like regardless. But it's nice to see. 3M dropped almost 4.5% on Friday. The yield, I think, is now like 3.3 or sorry, 4.3. Very high yield. I might start picking this up again below 140. It is below 140, so I'm gonna start picking up some shares here and there. I don't love the company. They're way too much debt. Not a lot of revenue growth, but their PE right now is about a 14. So they're getting really cheap. My prediction is the PE could get as low as 12. A 10 PE would be way too cheap. Actually, at 10 PE, I think the stock would be trading at $100. I don't think it gets there, but could get to 120. You know, could get in those zones. But this is where it starts getting interesting. Just add a little bit to the portfolio. There's a lot of stocks getting destroyed. Stitch Fix, I can't believe this dropped this much. This is just scary. Like the people that were in this and still like bag holding it. Just gotta do your research. I guess maybe it's unfortunate, but Unity too. Hard to put a value on this. I'm just gonna scan some of this. What's Space doing? Yeah, where'd that go? Did I take that off my watch list? No, I did not. I'm dumb. It is still fighting on the others. Wow, yep, that's looking bad. $5, I feel like, is where it goes. Like the next actual zone. Snapchat. Whoa, I haven't looked at Snapchat in a few weeks. Wow. Oh my gosh. That just continues to get like destroyed. In just like another month, it's down another 50%. Wow. Wait a minute. Entry profit warnings kicked into high gear and there's no slowing in sight. U.S. companies are warning of earnings misses that are striking higher and there's nothing to base it, blah blah blah. Yeah. I mean, regardless, CCL never came back. Blog, I thought I deleted blog. Goldman Sachs down like 5% on Friday. Oh, Amazon, where's Amazon? Oh, they had their split. Down, they lost $7 per share. I think we talked about this actually, yeah. But that did fall a little bit. Again, they're just expensive now, but this is the great part. Like, they were expensive, now they're like 30-40% cheaper. That's great. Like, you want that. Oh my gosh, wait. I don't remember seeing this one. I remember seeing this one, but did Netflix get... Wait, why don't I remember this? What day was this? 4/11. Wait, Netflix is this low? Oh my gosh. Wow. Wow. That valuation is... Wait, is this gonna tell me? This thing isn't usually too accurate. PE of 19. Even if the PE is 19 at that level, it's still... that's not that bad, actually. I mean, but then assuming it's gonna kind of grow a little bit. Yeah, I like companies that pay dividends. Again, in case you want to know my philosophy on buying companies, again, I don't always completely follow it because you don't find these companies that often because I'm pretty picky. So I try to be a little bit more lenient and just get them at better prices. But company with good balance sheets, that means little debt, not leveraged, good assets. You know, they have positive equity. They actually own the company. I want companies that are generating good free cash flow. Yeah, preferably paying a dividend. So if they're generating good free cash flow and they don't have a bad balance sheet, or they have a good balance sheet, they can buy back shares and or pay a dividend and just return that money to the shareholders. That's great. And I like to find them at a decent valuation. You know, it just gonna depend on how much we expect it to grow and yada yada yada. But like, I think Walgreens, just to put into perspective, and I'm opening up something on my computer. Or other thing, Walgreens and 3M. Let's see, 3M is at a 13 market cap, the 3-year free cash flow, which is, I think that's pretty good. So that's like my PE valuation wise, so pretty good. WBA, but Howard, 3M has a lot more debt to pay off, which they were probably not. Same thing with Walgreens. It's gonna depend because they're, what do you call it? Yeah, because they're more like a retail store. It's gonna, yeah, hard to explain. But I don't have the number. But anyway, their 3-year PE, Walgreens is about 8 or 9. So they're roughly, their market cap, the 3-year free cash flow is about the same because it's about that ratio. Actually, no. I'm sorry. Hold on. I'll put the screen over here. Let me do this really quick. Actually, let's see. This will be better. I actually don't have the 3-year thing here. Do I? Okay, so let's do this. We have the market cap. We're gonna divide that by the average. Are we doing the other way? No, let's do the average of, let's see, 1, 2, 3. I do 3 years because, I mean, you could do 4, but I think 3 is fine. So we're gonna divide that by 3. And it should be really low. It's an 8. Why is it still an 8? That doesn't make any sense. How is the PE? This should be a lot higher. I'm confused. Regardless, their market cap, the 3 years free cash flow is about an 8.8, which is like super cheap. That's great to me. But yeah, I mean, like, the growth potential of the company is gonna be a lot less. Like, there's a lot of other factors, but I'm just saying that, like, that's kind of what I'm looking for. I have yet to find the ultimate company. But yeah, that's the reason why we're not finding them, is because the valuations are just ridiculous. Like, Google's gonna be one of them. That's why, like, below or around like 2K. That's gonna be so great. But the thing is, they're never gonna pay a dividend. They've already said that in their report, and it just makes sense too. They're gonna put all their money into, you know, R&D and becoming like the top AI robot, ex machina stuff, you know. So as much as I like Google, I want a dividend because, again, these companies are great. Even like Apple's great, they do pay a dividend, but I want companies in my investing portfolio to pay me a very high probability of some return. So no matter what happens, if Walgreens, like, if the market gets chopped in half, and Walgreens is still able to generate the free cash flow that they are generating now, they will return me about 4.5% or 4.2%, depending. That's the yield I have on them right now. That's it helps me sleep better at night, as opposed to, let's say, Google. If I own Google, it gets chopped in half. My investment it gets chopped in half. Like, there's no appreciation to that asset. I get it. It's gonna depend on each individual person and what you want. That's why investing's great. You can just buy something that fits your investing needs. To me, I want a lot of companies like Walgreens, or I want a big percentage of my portfolio in companies like, let's say, Walgreens, where I know maybe a 4 to 5% yield every year I'm getting, whether the stock price goes up or down. I like that. Yeah, there's obviously pros and cons to everything, but yeah. Let's see what else. What's Caterpillar doing? What's McDonald's doing? I actually don't like McDonald's from a valuation point of view, and their finances are just whack. Let's see what else I'm looking at. Berkshire Hathaway. Again, the Berkshire Hathaway doesn't pay a dividend, but they think they can reinvest their dividends much. Yeah, that's another thing too. Dividends are like double taxed, so it's actually less efficient for a company to pay a dividend than just, you know, buying other business, than for the company to buy another business or something like that. But again, I want that investment, a return on my investment, and I want it to be known and have a high probability of being consistent. What's Qualcomm doing? I haven't like scanned through anything in a while, so let's just chip away some stuff. TSM, Texas Instruments, SM Energy. Oh wow, wow! I can't believe this stock is this high. I'm so dumb. PPC. Anything too good? Oh yeah, all the gold stuff they produce. What's Tupperware doing? I was debating buying this. I don't know. I don't feel the need. What's Locky doing? I don't feel the need to like buy these not riskier, but like these other investments, like let's say like smaller cap companies, or like even like Corsair or something. Like, interesting pattern. like, I just don't feel the need to buy them if I could just buy other things that are, like, again, like, if I could buy a 3M or, I mean, hopefully Procter & Gamble fell. Come on, this thing is so expensive. This thing could drop down to here and it would still be kind of expensive. But I'd rather just buy very stable assets that are yielding a decent percentage and just, like, chill. I'm not saying buy and hold forever, but I'm just saying, like, I can chill for 5 to 10 years on them and feel okay. I think that's kind of what I'm looking for. But everyone's gonna be a little different. Man, come on, can Procter & Gamble, like, that's crazy. Just to put into perspective, hold on, what is, I have a, is it valuation? Hold on, let me look at something really quick. I did not know I had to do this valuation. On Procter & Gamble, they're, for 2021 year end, so whenever that was, their PE, their 3-year PE from that point was a 33. Their current PE as of today is 24.8. This company has like almost, not a 0, but maybe like a 5% revenue growth a year. No, it's definitely less than that. Maybe like 2 to 3% per year revenue growth. Why is this company being valued that high? And their dividend right now is a 3. Oh, it is a, oh no, it's a 2.4%. I was reading that wrong. So low dividend. They have a terrible balance sheet. They are an insanely high valuation. I just think people, you know, on YouTube, they're like, oh, this video, no, this company's great. Consumer discretionary or is not discretionary. Whatever one where you need this company needs to exist for shaving, toilet paper, showering and stuff. Those products. I get why it's valued a little higher, but I think even a valuation of like 20, a PE of 20 to like 25 is way too high for this company. It's 33 from like a bit longer term perspective. It's got 24 for trailing 12 month, but let's look at companies from a not just 1 year point of view. 3-year perspective, there, even if it's a 30 PE, this company can literally fall 30%, which actually would be here. That would actually work out fine, and that coincides with like about $100. It's weird how that works out. Maybe it's a coincidence, but yeah, it can fall that much, and it would still be somewhat expensive. If it did fall to $100, they're paying a 2.45. No, they're paying a 3.48. Dividend falls. Oh, I'm so dumb. Yeah, it's 3.48%. And also their 3-year free cash flow payout ratio is a 60%. So they're not going to be able to increase that dividend as much. They'll be able to increase it, just not that much. Would like to own the company again, but it's just so expensive. No need to. Anyway, though, I'm gonna wrap this video up. Yeah, I haven't been posting too much, obviously, but do appreciate everyone who comes out, listens to these videos. We'll try to do some more here and there, but probably once video every like 2 weeks or something like that. It's not that they take that long to do or anything, but it's just, I don't know, I just don't feel the need to really make consistent, or not consistent, but constantly be making a video about the markets in general, just because, like, they're gonna do what they're gonna do, and just making a video for the purpose of making a video just seems a little, like, redundant or something, you know, but when we actually have stuff to talk about, and then it all kind of comes more together, and it feels like a more important video for everyone to listen to and enjoy. But yeah, if anyone's got video recommendations they want me to make and stuff, I feel like I already made a bunch of videos, that's why I haven't really been posting a lot of other types of content too, but if you guys want me something specific, or you want me to reiterate something even said in a previous video, wouldn't mind doing so. Anyway, thanks for watching, take care, hope you enjoyed, hope you found it nice, relaxing. Stay safe out there, market might get a little volatile, but buy stuff you want to own, not, I mean, you can trade, but it's gonna get risky. Take care, see ya later.